Hello traders, Gary Wagner here, approximately 11:30 in Honolulu, 5:30 in New York. It is Monday, April the 5th, 2021, and this is the daily report for gold and silver. Although we had a mixed bag in the precious metals markets today, we had dollar weakness really supporting all of the precious metals and a very strong U.S. equities markets really providing very, very strong headwinds, curtailing any kind of major upside move. Considering the strength of U.S. equity markets today, with the Dow and S&P 500 closing at new all-time record highs and a very respectable 1.67% gain in the NASDAQ composite, gold and silver held up relatively well. Gold, basis the most active April contract, is currently fixed up 80 cents on the day at $1,729.20. In fact, if it was not for dollar weakness, we would have had a much more severe drop in the precious metals today. The dollar index lost about 0.45% on the day, 42 points, currently fixed at 92.63. This first chart that we are looking at is a daily candlestick chart of April gold. We can see a couple of things on the positive side today when we take a look at the activity that we saw last week, in which we had a variation off of an engulfing bullish pattern. We also had a double bottom created from market action that occurred recently, meaning end of last week, as well as the beginning of the month. I've just gone ahead and circled these two areas that show really, really solid support. If you recall from Friday's show, we talked about the fact that this has been an area of support really throughout the year. The key, as far as I'm concerned, is today's candle. And although we saw gold trade with a higher high and a higher low, as well as a higher close, it was such a nominal change, and the fact that it was created almost completely due to dollar strength. In other words, traders were actively selling both gold and silver. I was reluctant to issue a buy signal on either of those two precious metals. In terms of gold, we're still well below all three moving averages. While we do have decent support in the market, I'm going to go ahead and convert our basic candlestick chart into a Henkin-Ashi chart, which I have just done. It does indicate not only the double bottom, but the fact that we do have a mild uptrend, meaning we do have no lower wicks when we look at the last two trading days in terms of the candles themselves. However, body size is really not that large, and I really would like to see gold take out a certain area, which I believe is a critical area of key resistance right now, and it's simply based upon a series of tops that come in at approximately 1740. I'm going to draw a line straight across so you can see what I'm saying. About 1740 to about 1750. We have just opened up in Australia. It is now Tuesday morning there. We can see that this little line right here represents that it is pretty much unchanged from the close we witness in trading in New York today. And really the number that I would feel comfortable with would be approximately 1742. If we can see gold pricing move to that level, that would make me much more comfortable in terms of indicating that we would see higher movement in the market. A move above this level of resistance that we talked about, we really don't get any strong resistance up until around $1,800 per ounce, and that is based upon these tops right here. Silver did decline today to the tune of approximately 4 cents. It is below $25, with the most active May COMEX contract currently fixed at $24.91. In terms of the technical indicators that we are looking for in silver, when we look at today's trading activity, and that is this red candle that I am circling, What we can say is that it closed right at the 200-day moving average. If you recall from last week's show, we talked about the fact that we had effectively seen it close above the 200-day moving average, and that's a positive sign. This small candle here is trading in Australia right now, and it is currently trading at 24.88.5. It shows it up about a dime from where it is fixing the close, because it's fixing the close at the 200-day moving average, but it is a cent to a cent and a half lower than where we reported silver to be. Traders, I do want to apologize. We are on the last final stages of the rebuild of our studio. That's why the intro was a little bit different, but all of that should be resolved by tomorrow, Wednesday, at the latest. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.